Good morning and welcome to Channel Banking and Finance 360. Today we delve into Sukuk, a cornerstone of Islamic finance that serves as a Shariah compliant bond. Unlike traditional bonds, Sukuk represents ownership in an asset or project, ensuring that investments are tied to tangible benefits and ethical principles. They facilitate financial inclusion while promoting risk sharing between investors and issuers. Sukuk, the plural of the Arabic term sak, serves as a pivotal instrument in Islamic finance. Unlike conventional bonds that merely represent a debtor-creditor relationship and yield interest, Sukuk represent true ownership stakes or financial rights in tangible assets. These assets can be anything from projects, services, or specific financial activities. Essentially, Sukuk bridges the gap between investor funds and real economic activities, paving the path for a more ethically aligned investment approach. The uniqueness of Sukuk lies in its foundation on Shariah principles. Islamic finance forbids riba, or interest, necessitating a different framework for asset investment. This requirement gave rise to Sukuk as a viable alternative. This structure facilitates fundraising for governments, enables companies to finance their projects, allows Islamic banks to invest surplus funds, and opens up avenues for investors seeking compliant investment opportunities. Essentially, Sukuk cultivates a diverse financial landscape while adhering to Islamic tenets. In comparing Sukuk to traditional bonds, the distinctions become glaring. Sukuk is tethered to the performance of underlying assets and projects, thereby offering returns that are intrinsically linked with productive economic activities. In contrast, conventional bonds typically guarantee interest irrespective of an underlying economic scenario. Additionally, Sukuk assures compliance with Shariah, rendering it ethical and aligned with Islamic values, whereas bonds often lack such constraints. The fundamental principles steering Sukuk emphasize avoiding riba and excessive gharar, ensuring that the structure does not act as a mere conduit for interest-based transactions. Each Sukuk must promote permissible business engagements and maintain a legitimate connection to productive economic activities. This strong linkage between risk and return forms the bedrock of any Sukuk investment. Navigating the realm of Sukuk reveals a complex interplay between risk and reward, making it essential for investors to understand the characteristics shaped by their underlying contracts. As the landscape of Islamic finance evolves, the importance of Sukuk continues to grow, presenting a range of opportunities for ethical investing. This comprehensive understanding isn't just academic. It encourages investment avenues that honor both economic and spiritual principles. Sukuk transactions involve a variety of key players that collectively contribute to the financial infrastructure of Islamic finance. At the forefront is the issuer, typically a corporation, government, or financial institution, which seeks to raise capital through the issuance of Sukuk certificates. These certificates attract the attention of diverse investors, ranging from individual savers to institutional entities, all eager to purchase these instruments and thereby provide the necessary funds. Another vital party is the Special Purpose Vehicle, SPV, an independent legal entity designed to hold the underlying assets of the Sukuk and ensure that transactions adhere to the established structure. The SPV acts as a crucial intermediary, separating the Sukuk's financial operations from the issuer's balance sheet and enhancing transparency within the transaction. In tandem with the SPV is the Shariah advisor, who plays an essential role in verifying that the Sukuk structure aligns with Islamic law. This expert scrutinizes all aspects of the transaction, ensuring compliance with relevant Shariah principles. To safeguard the interests of Sukuk holders, a trustee or agent is often appointed. This representative acts on behalf of the investors, providing protection and oversight to ensure that their rights and returns are duly honored throughout the life of the Sukuk. These multifaceted roles create a cohesive framework where all parties cooperate to facilitate successful Sukuk transactions. Delving into the major types of Sukuk, we first encounter Sukuk al-Ijarah, which operates on a leasing mechanism. Here, investors' rights revolve around an asset's benefits, deriving returns primarily through rental income. This structure is often employed in circumstances where physical assets, such as buildings or machinery, are pivotal. Next, the Sukuk al-Musharakah structure embodies a partnership approach, welcoming investors to jointly venture with a business. The sharing of profit and risk defines this collaborative model while adhering to Shariah principles. Similarly, Sukuk al-Mudarabah introduces a model where one party invests capital, while another manages the operations. Returns from profits are typically shared as agreed, while respective losses align with contractual agreements. Sukuk al-Murabaha shifts focus to a cost-plus sale arrangement, where assets are procured and sold at a disclosed price plus profit margin. This variant requires meticulous consideration regarding asset eligibility and Shariah compliance. Additionally, Sukuk al-Salam is characterized by advance payments for goods, facilitating financing in sectors like agriculture and commodities. Lastly, Sukuk al-Istisna offers a robust avenue for financing construction and manufacturing projects, underpinning critical infrastructure developments, thus showcasing the versatile applications of Sukuk in Islamic finance. The journey of Sukuk issuance begins with a clear identification of financing requirements. Companies and governments often find themselves in search of funds to fulfill crucial projects, such as constructing new factories, expanding operations, or investing in infrastructure development. This step lays the groundwork for the subsequent stages, as determining the financial need is key to understanding the overall objectives of the Sukuk. Once the financing requirement is established, the next step involves selecting the appropriate Sukuk structure. Financial and Shariah advisors collaborate to determine the Islamic contract that aligns with the project's goals, while ensuring compliance with Islamic law. This careful selection process emphasizes the importance of integrating faith-based principles into contemporary financial practices. Identifying the underlying asset is a pivotal element of the Sukuk issuance mechanism. This could encompass eligible assets such as usufruct rights, tangible projects, services, or business activities that the capital will support. By establishing the asset's foundation, it reassures investors of the tangible value they hold in the Sukuk. In some cases, establishing a special purpose vehicle, SPV, is necessary to manage the Sukuk structure effectively. The SPV acts as a dedicated entity that operates independently from the issuer, ensuring transparency and accountability during the life of the Sukuk. Following this, the Shariah review stage is crucial, as the advisor verifies that all contracts and documentation align with Islamic principles. After completing the reviews and obtaining the necessary approvals, Sukuk certificates are issued to investors. This issuance can occur through public offerings or private placements, allowing Sukuk to reach a diverse array of participants. At this juncture, investors step forward to contribute capital by purchasing these certificates. With the funds acquired, the issuer utilizes the capital according to the pre-approved Sukuk structure, executing the intended projects or assets. Investors, in turn, are engaged through a predefined return mechanism based on the type of Sukuk involved. Whether through rental income from Ijarah Sukuk or profits from a Musharakah venture, the returns vary, thus catering to different investment appetites. Lastly, as the Sukuk matures, it is settled in line with its contractual agreements, concluding the financial cycle. The beauty of Sukuk lies not only in its compliance with Islamic finance principles, but also in its ability to create impactful investments that contribute to the broader economic landscape while fostering ethical financial engagement. Sukuk plays a pivotal role in the evolution of Pakistan's Islamic capital market, linking investors to compliant financial instruments that adhere to Sharia law. With a regulatory backbone established by the Securities and Exchange Commission of Pakistan, SECP, investors can engage in an ecosystem designed to foster ethical investment opportunities. The establishment of the Sukuk framework signifies a commitment to integrating Islamic finance within traditional economic structures, establishing a new landscape for financing. This innovative financial product can take various forms: government or sovereign sukuk, which draw on state-backed guarantees, corporate sukuk that provide business financing, and publicly or privately placed sukuk offering options tailored for specific investors. The State Bank of Pakistan supports these initiatives, enabling a robust participation of Islamic banks in the market, which helps in expanding the reach of Islamic investment opportunities. Sukuk offers notable advantages for various stakeholders. For investors, it assures Shariah-compliant investment prospects, potential regular income streams, and the ability to diversify portfolios by accessing various assets. Companies benefit from Sukuk, as it opens new avenues for financing large-scale projects while connecting with Islamic investors. Governments, in turn, find in Sukuk a valuable tool for raising funds to support infrastructure and development initiatives, fostering the overall growth of Islamic capital markets. However, engaging with Sukuk is not devoid of risks. Investors must navigate credit risk, where issuers might not fulfill financial obligations, and market risks that lead to fluctuations in Sukuk values. Liquidity risk poses challenges in quick sales at acceptable prices, while asset risk concerns the financial health of the underlying projects. Sharia compliance risks highlight the need for maintaining rigorous adherence to Islamic finance principles, which, if altered, may affect investor confidence. When comparing Sukuk to traditional shares, the distinctions become apparent. Sukuk represents a certificate tied to specific assets or enterprises, unlike the equity ownership represented by shares. Returns from Sukuk are derived from contractual agreements relating to the underlying assets, contrasting with dividends and capital gains from shares. Moreover, Sukuk often has maturity periods, unlike the perpetual nature of most shares, marking significant differences in investment strategy and risk tolerances. Sukuk stands as a pillar of Islamic finance, representing a distinct channel for investment that aligns seamlessly with Sharia law. Unlike conventional financing methods, Sukuk offers a pathway that fosters ethical investments while attracting diverse investors. Banks engage with this innovative instrument through various channels, such as direct investments and advisory services, amplifying the significance of Sukuk in the Islamic capital market. It evolves into more than just a banking tool. It nurtures a comprehensive financial ecosystem that resonates with the principles of ethical economics. At the heart of Sukuk's legitimacy lies Sharia governance, a framework that ensures compliance and functionality. This governance includes the involvement of Sharia advisors whose approval is paramount, alongside rigorous documentation that adheres strictly to Islamic mandates. Regular audits and oversight maintain a commitment to Sharia compliance, establishing trust among stakeholders. In countries like Pakistan, regulatory frameworks provide reinforced support for these governance principles, promoting steadfast standards across all Islamic financial products and increasing investor confidence in this sector. The avenues for offering Sukuk include both public offerings and private placements, which cater to different segments of investors. Public offerings attract a wide audience and enforce stringent compliance, creating an environment of transparency and trust. Conversely, private placements target select institutional investors, enabling focused funding initiatives. This flexibility in offerings means Sukuk plays a crucial role in driving economic development by mobilizing Islamic savings, financing significant projects, and fostering inclusive financial opportunities. Investors are drawn to Sukuk not only for its potential returns, but also for its commitment to ethical principles in finance. For Sukuk markets to flourish, crucial success factors must be in place. Establishing clear Sharia standards is essential, backed by robust regulatory frameworks and transparent documentation practices. Effective risk management, along with qualified Sharia advisors, is integral to maintaining market stability and boosting investor confidence. Moreover, an active secondary market and increased investor awareness can enhance the efficacy of Sukuk in the financial sector, echoing the importance of organizations like AAOIFI, which issue standards that advance transparency and consistency in Sukuk investments. In summary, Sukuk represents a vital tool within Islamic capital markets, providing varied financing paths while staying true to Shariah principles. It transcends simple comparisons with conventional bonds by revealing its diverse structural options like Ijarah and Mudarabah. Recognizing its complexities and potential fosters an understanding of how Sukuk can promote ethical investments, stimulate economic growth, and preserve Islamic values in a continually evolving financial landscape. Thank you for watching this video. I hope you found it informative and valuable. If you enjoyed this video, please like, share, and subscribe to the channel for more educational content. If you have any questions or suggestions, feel free to leave them in the comments below. See you in the next video discussing another exciting topic. Until then, take care and keep learning.